you like my videos, please make sure you hit the subscribe button, hit the like button, comment below. Tell me what you like, tell me what you don't like. If you have questions, put them there, and as long as they're relevant, I'll answer them for you. So the purpose of today's video is this is every weekend now I'm going to do a weekly market recap showing a few of the trades that I took from and some that I was not able to take using trading now using supply and demand trading, right? Supply and demand zones basically for continuation and reversal trading on the 4-hour time frame, right? That's where we're identifying not only the market structure, but we're identifying the supply and demand zones. Okay. So supply and demand zones are basically just order blocks. They're you know, uh, for sell orders, there are supply zones. For buy orders, there are demand zones. So technically, they're just order blocks where we're waiting for price to come back to, right? We're identifying them on the 4-hour time frame. We want to take the trades with the current market structure bias, right? So it can be a continuation trade. It can also be a reversal trade. I'll show you that here in a second. The trades will be taken on a 15-minute time frame. So once price hits that 4-hour supply or demand zone, we're not going to just trade. We're not going to just set our limit orders there, although there could be some instances where we do. That would be if we're trading from a clear extreme supply or demand zone, and we think the price really has no reason to go further above it or further below it. We may set a limit order there, but those trades are always going to have a lower risk to reward ratio because the invalidation zone is going to be larger, and price is going to have to move a lot further to get to our profit targets, right? Our targets. So trades will be taken on the 15-minute. Normally, we'll find a a refined supply or demand zone on the 15-minute after we get that change of character or lower time frame flip that we're looking for. I'll tell you all about this. Invalidation zones will be at the top of that zone, and the target will be the next higher low. Must have at least a 1 to 2.5 risk to reward ratio to take the trade. Okay, so when I say that we're going to look for, we're going to do continuation and reversal trades, right? So continuation trades are when price is making higher highs, higher lows, higher highs, higher lows, right? You can see how price is moving up here. You're getting a break of structure. You're making higher highs, higher lows, higher highs, higher lows. You would look to take trades. Of course, we're not going to take trades as structure is broken, right? We want to take trades once price pulls back to these valid demand zones for this bullish continuation, or these valid supply zones for bearish continuation. Okay, but the continuation trades would be all the way up here. Now, when you get to the top here, and then right here, price comes down, right? Fails to make so you got a higher high, you got a higher low. Price then fails to make a higher high, and it moves down, breaks this structure, which we call a change of character or a choke, and it makes a now lower low. Okay, so at this point, now the bias on the market is bearish. However, since you were in a bullish uptrend here, a strong bullish uptrend, before I would want to take a reversal trade, okay, I would probably wait for another pullback, and I would probably wait for this break of structure here. Then I can identify a valid supply zone up here where I could take the trade, and then we would have continuation trades to the downside. Now, there may be some situations here where you get the change of character, and we could identify a trade, a supply zone up here that we could take a sell order from. Okay, just know that there is a chance that this was just a fake out, and instead of now going to the bearish side, price may continue moving upward. Okay, and I kind of show you that here in this example right here, right? How we have this bullish continuation, price comes down, breaks that structure, right? You're making higher highs, higher lows, higher highs, higher lows, higher high, and then you make that lower low that breaks that structure, causing that change of character right there. Okay. Let's see. And so when that happens there, you could then start looking to find a trade here from this demand zone up here. But then what might happen is price may then just move back to the upside, faking you out, and the bullish continuation may continue. So a lot of times here, as you're in this bullish continuation, you're going to look for those bullish trades. Once you get this change of character, if we had a strong bullish trend like we have here, we may wait for that pullback and that break of structure to the downside before looking to take any sell trades, right? So we may just not trade from this area here, okay? Now, on the other hand here, if price is making higher highs, higher lows, higher highs, higher lows, higher highs, and it breaks that structure to that downside, causing that change of character, but then it goes right back to the upside, which is actually another change of character now. Then, since the original price action was bullish, it would be safe for us to look for a demand zone down here to possibly trade from and continue this bullish continuation. You'll get more of that when we're on the charts here, but I just want to kind of show you that this is the basis of the trading plan, is that we're using these supply and demand zones for continuation reversal trading on the 4-hour time frame, right? But the trades will be taking on the 15-minute. So to show you what that looks like here, here's a 4-hour demand zone, maybe down in this area here, right? Price has been making, assuming price has been making these higher highs here and higher lows. We have a bullish bias, right, on the 4-hour time frame. And so we try to find a 4-hour demand zone in this area here. And we'll give you the rules for that in a second. Now, if price has a bearish bias, then we look for a 4-hour supply zone to trade from, okay? Now, once these areas are hit, right, you set your alerts right on the beginning of those areas, and once they're hit, then you would drop down to the 15-minute time frame looking for that lower time frame flip, change of character, right? And so what happens here is you could price is coming up on the 15-minute now, right? Okay, price is coming up. It's making those higher highs, higher lows, higher highs, higher lows. It goes into our 4-hour supply zone, comes down. Now, at this point here, we're looking for a change of character right here because this is the lower low. Prior to this high being made, this is the low. So when price moves down to here, right, and then pulls back and then goes lower, this area right here is not the change of character. This area is. Okay, and when that happens, you're now looking to find a refined supply zone on the 15-minute time frame right here. And what this will do is this will give you a better risk to reward ratio on your trade, right? And that's what we're looking for, okay? So that's kind of how you look at that. Now, in the event, let's say the price comes up into the zone, it pulls back. So initially, right, we were looking at this being the change of character down here at this point. The price pulls back and then goes higher. So since it makes a new high, you now have a new swing low where you want to put your line for your break of structure or change of character, and then you look to trade from this refined 15-minute supply zone here. And it would be just the opposite, obviously, for buy trades. You would be trading from demand zones, okay? So that's kind of what it looks like. Now, here's kind of the trading plan is to, like I said, trade with the 4-hour market bias, identify 4-hour valid 4-hour supply or demand zones. When price hits those zones, drop to the 15-minute, wait for lower time frame flip, change of character, then identify refined zone on the 15-minute, and that's where you'll set your limit orders at, right? Now, the rules for these supply and demand zones are you must have a break of structure. You must have caused by an impulse candle. Now, the impulse candle has to lead to a break of structure. It must have imbalance, right? Which we'll be showing you. The area must not be touched after you get the impulse candle. You can't have a wick or something coming back touching that area. So that's mitigation. So it's not mitigated. And then the fourth thing is is the liquidity grab. Prior to the impulse candle, you need a liquidity grab. You need see some kind of liquidity grab. So that's usually just a wick or something going a little bit lower before the impulse up, or going a little bit higher before the impulse down. Okay. And then, of course, remember obviously that these zones, right? These supply and demand zones are basically areas where there's been a little consolidation prior to that impulse candle and that break of structure happening, right? So that's kind of what the trading plan is going to be. Okay, so you know, it's important that before you watch my weekly market recap, that you watch this video here, or else you'll have no idea what I'm talking about on the weekly market recap. Okay, so it's important to watch this video. I'm going to try to find a way to play it at the beginning of each video that I make, each weekly market recap. But if I can't do that, I'll just reference that there's a link down in the description area that you need to go to. The other thing is if you want to learn more about our trading community, the company we're with, our company has, live educators do live training 5 days a week, on different ways to trade. This is more of a smart money strategy, right? Using supply and demand zones or order blocks on the 4-hour time frame. There are educators in our company that do live training on this. We also have a community of over 6,000 people. We have our own trading strategy in that community using our company's impulse scanner. And so if you want to see what our community is about and you want to learn how to trade, then just visit our secret podcast. There's 10 short videos there at SorianoBlueprint.com/secret. Okay. So now what I'm going to do is I'm going to move on to the weekly market recap. Hey guys, Bill Soriano from Pittsburgh here, and this is my supply and demand zone trading video. This is my weekly recap for the week starting February 17th and ending today, February 21st. So I'm getting to this video a little bit earlier. Usually I make it over the weekend, but I am getting to it a little bit earlier today. So if we look at, if you remember last week, I think I lost 3 out of 4 trades, but I had a profit of about $500 or $600, which was about 0.5% of my trading account. And this week we actually lost 3 trades and we won 3 trades. So we won 3 out of 6 trades this week, and we got a profit of, let's see here. So our profit for this week is $2,026. Okay, so that's after all the commissions are paid and everything. You can see the net P&L here. So we took 3 losses. We had 3 wins. We had 1 really good win in GBP JPY, and that was what propelled us to the $2,000 profit. So that's about 2% of the trading account. And so if you look at the trades here from this week, we essentially took trades with 3 pairs, right? GBP, it was AUDNZD, GBP CHF, and GBP JPY. All 3 of these initial trades that I took this week ended up losing because I had read the 4-hour structure incorrectly, and I placed the stop loss in the wrong place. Okay, so I tried to be too aggressive with the stop loss, and what happened was I got stopped out of all 3 trades that I took initially for a loss. And then what happened was after I reread the market structure, I seen that I still expected price to go the way I expected it to go. I seen that I was in a new supplier demand zone. So I decided to get back into each one of those trades after I had lost. And then I was able to recoup some of the money in AUDNZD and GBP CHF. And then GBP JPY was the big winner for the week, which enabled me to get back into profit. So you could see the other mistake I made in AUDNZD is I lost $2,000. That's 2% of my trading account. And as you guys know, I tell you, you're only supposed to risk, I only like to risk 1% of my trading account at most. And so I obviously did something wrong when I set up this trade in AUDNZD. And that's why it's so important you're trading on demo at first. especially when you're using a new platform like this is Trade Locker. So this is a little bit new to me, especially when you're setting up limit orders, which is what we're doing here with the supply and demand zones on the 4-hour time frame. And so I made a mistake there, which cost me to lose an additional $1,000. Had I not done that, I would have showed a profit of $3,000 this week, or 3% of the trading account, because this is a demo account, a $100,000 demo trading account. So you see your NZD, AUD, NZD, I lost to 2,000, should have only been 1,000. And then when I made back 1,400 of it, that would have put me into the green, right, into profit. But I made that mistake and I somehow risked 2% of the trading account instead of just 1. Then in GBP CHF, I lost the 1%, which is what it's supposed to be, $1,041, and then 1,048 in GBP JPY. Then when I got back into GBP CHF here, I got back, about 3/4 of it. I got out of the trade early because I, again, read the market structure wrong. I thought that the trend was changing on me. And so I wanted to be able to recoup most of that loss before GBP CHF started going the other way. Again, this was a mistake. I'll show you when we go over that pair here. And then, of course, the big winner was GBP JPY. I did exit half the position when I was up like 3%. And then I decided to get out the next morning. Ended up making about, $3,400 on that trade, again, on this demo account. So that's what got us, to the $2,026 profit for the week. So last week, like I said, I think the profit was, I think it was $500 or $600. I can't remember. Let me see here if I select the last 30 days here. That's showing something else there. Anyway, the last week was $2,026. I think the week before, if you watched the video, I think I had a profit of $500 or $600. I lost 3 out of 4 trades, but was able to get a big winner in that was USD JPY here. That was this trade right here where I got $3,500, right? So each week I've had one of those big winners that got me like a 3.5% gain on the trading account here. $3,600 on the $100,000 trading account. So that's what that's looking like. So things are looking good. Like I said, with this strategy, again, you just watched the video. You just watched me explain the strategy, right? I have a video that's 12 minutes, 23 seconds that I run before the weekly outlook here, and I put them together so that you can see what the strategy looks like. So I explain everything in that video. Now, as you keep watching this every week and you don't want to rewatch the training section showing you how this strategy works and how to use it, you can just fast forward past that first 12 minutes, 23 seconds, right to where I go over the weekly outlook. And again, this is the weekly outlook for the 17th through the 21st. Okay, so let's look at AUD NZD first here. So again, when we look at the 4-hour time frame, and what I found this week was the strategy has us, once the 4-hour zone is hit, right, we're then dropping down to the 15-minute. And so I've noticed during this week that there was a couple trades where I didn't catch the trades early enough, and I was able to actually wait for the confirmation to occur on the 4-hour time frame. So this is actually another way that you can do it. You don't necessarily have to drop down to the 15. You can drop down to the 15. Sometimes the 15 looks a little scattered and you can't really find exact points to get in. And if that's the case, you can just wait for that structure, to occur on the 4-hour. You could just wait for that change of character on the 4-hour, and then you can just get in the trade on the 4-hour instead of dropping down to the 15-minute. Conversely, you can also drop down to the 1-hour first. Once you hit your zone here, you see we were in an uptrend here. So we identified this supply zone right here. We also had another one down below it, right? there wasn't much imbalance there though. So we really didn't expect price to go down there at all. Okay, there was really no reason for price to go down there unless it was just going to keep going. Which as the week goes on here, you can see how price is actually coming down now. But this was the part of the trade that got us, the $1,400, what was it, $1,400 profit on profitable trade, but we lost 2,000 because we set the stop loss wrong. So anyway, right here is where price initially goes into that zone. And so what I did was I dropped down to the 15-minute, you know, and so all the way back here is where that's at. You could see price comes down, pulls back, goes lower. So we have this area right here identified, this blue line, as kind of our change of character, looking to get that change because price is obviously bearish here on the 15-minute, and we want to go bullish. So we don't want to just get in. We want to wait for price to give us a change of character to the upside and then come back to a refined supplier demand zone in this case, since we're buying. So anyway, we get this change of character right here as price closes above this blue line here. And that identifies this little area right here as our supply zone. And so we went back to this low here, right? Because this is kind of where we were looking to get in. We went back to this low for our stop loss. And you can see what happened was as we got into the trade, we immediately got stopped out of the trade, right? This is probably some kind of news candle. I can't remember. But then as you can see, after that happened, price just reversed and went the way that we wanted it to go. So this is where we eventually got back into this trade when we seen that we just put our stop loss in the wrong place here. And the reason why we determined that was, I think when we look to the left here, even on the 15-minute time frame, I don't think there was anything on the 15. There was a little bit of imbalance right down here below this, right? So there was that little bit of imbalance there. But that really wasn't what we were looking at. So we went to the 4. When you go back to the 4-hour here, you could see here that we had some, I'm not exactly sure what I was looking at there. That's kind of what happens. But anyway, price came down here and I just decided to get back in the trade because I knew everything still looked good. For some reason, price came down into this area right here. Even though there was no imbalance or anything like that, it just kind of came down into that area and it didn't really go any further. And so when price started moving back in the direction that I assumed it would go, that's when I got back in the trade, and you can see it went all the way up to here at this point. I got out at some point prior to that. So that was AUDNZD, right? So the next trade was GBP-CHF here, and you could see I have two trade boxes set up because the first one, you could see how I got stopped out because again, I was using, I believe, this wick here. Price came, into the 4-hour zone. It moved away, and then it came back. And then what I noticed was, see how you got these two wicks going up to this area right here. And what I found was when you go all the way over here, that I hadn't initially seen this, but this was you could see right here, this was a zone right here where there was some imbalance right in here. Okay, there was a little bit of imbalance right in here. If I turn on the imbalance detector here, you could see all the imbalances. These were all filled here, but you could see there's some imbalance right here. that hadn't been filled. And then there was some imbalance right above this zone here. And so there was another supply zone up here on the 4-hour time frame that I had missed in my initial my initial analysis of this pair. And so again, price came up there. After I got in the trade, I got stopped out of the trade as these wicks go right up, and they just touch that supply zone that was up above there because there was that imbalance right before it. And they just touched it, right? But that was enough to take me out of the trade. So again, I seen that there was a supply zone right up above there with some imbalance that I had missed. So once price started moving again in my direction, I got back into the trade. Then what happened was price came back up to that same spot. So I got two wicks there, right? So there's equal highs up there. So I started worrying that there was going to get some liquidity build up here, and the price was eventually going to shoot back up past here before it went down. Okay. But the other thing I misread was that you really don't get a change of character here, because notice how price is coming up. We get a change of character. I'm sorry, you get a change of character. But then after it pulls back, you don't get that break of structure that confirms the trend change, right? So first you get a change of character, right? Change of character is a break of structure when price is going against the current trend, okay? So price was moving down, right? We got that change of character to the upside. That happens a lot because a lot of times price has to go through that break of structure, change of character to get to the supply or demand zone. Okay. But what you don't want to happen is you don't want to see a pullback and then another break of structure. That's what we used to call a 2x2, right? And so that gives you the actual change of trend where you would now, instead of looking for sales, you want to start looking for buys. So instead of looking for supply zones to sell from, you want to look for demand zones to buy from. Okay. But what I misread was that this wick was here and it did not break the structure, because in order for you to get a break of structure confirming a change of character or a trend change on a 4-hour chart, right? When you're determining market direction, you need to have a body of a candle close above wherever that wick was. And we didn't get that, right? We got these wicks, but we didn't get a body closing above this wick right here, this candle right here. And since we didn't get that, this was still bearish, okay? And you can see here that during, Friday here, price, after it started moving back up, this was my entry here on the second position, right? That was the other thing. On all three of these positions that I initially lost, I eventually got a better entry when I got back in, okay? And so you could see here that this then started making a very good move down. I got out of it though, like I said, trying to get, I got like 3/4 of the money back that I lost on it, which was good. But I could have gotten a lot more because this will probably keep going down, you know. So that was GBP CHF. So the other trade here was in GBP JPY. And like I said, I initially lost the first entry I got in, as I showed you in my trade locker account. And then what I noticed was I think it was on the 4-hour time frame on this one. Again, this was the 4-hour structure here, right? It had been bearish, right? From this point here, it was moving down. We had this supply zone here, which we kind of figured was going to be inducement because there was a lot of imbalance right above it, right? All this imbalance here, if we turn on the imbalance detector, right, you could see this huge imbalance. Some of it got filled here with these wicks, but most of it was still open at the time, right? And, and then we had this supply zone up here, okay? And again, the supply zone, you'd actually use this blue candle right here as to define your supply zone, but because you have all these wicks higher up here, you have to kind of make it a little bit bigger. Okay. So on this 4-hour now, like I said, this is one where I'm not exactly sure how I did it, but I know I got back in this trade. And then what you see is, again, I got back in the trade because after I got stopped out, I seen that I had just put my stop loss in the wrong place. Okay. And so once price started moving back in my favor, I got back into the trade. And you can see here that it ended up working out. It went all the way almost to my target here, where the market closes on Friday. I did get out though the day before, because I got out before this pullback occurred here because I was a little bit worried about what it was going to do there with the news also. There was a lot of news coming out on Friday morning, so I was concerned about that too. So I wanted to get out before Friday anyway. Now, here's what I'm saying when you look at this 4 hour structure. Sometimes a lot of times you can wait for the confirmation to occur on the 4 hour. Price comes into this zone right here. We knew it wasn't going to hold in this zone. We knew it was going to go through here, and obviously it did. So now price is moving up, right? So you want to take this down. You don't want to just jump in because it could just keep moving, right? So you see it makes this move down to here, okay? Pulls back. And actually, all of these are entries here. These are all, you could see here, if you look at this structure, let me just show you this on the 4 hour. You see how this moves up to here, comes down to here, pulls up. And then when it moves down to here, that gives you this change of character right here. That's what you're looking for. Okay. And then you can identify this candle right here as your refined or your it's a fractal confirmation, like a fractal zone here on the 4 hour, because price already hit the 4 hour zone, and now you get that confirmation saying that it's now ready to move to the downside. You get a confirmation that it will more than likely move to the downside. Sometimes you get that confirmation, then it just turns around on you. But now you have this area here, right? And you could see all these candles move right back to that area. All these wicks go back into that refined supply zone there on the 4 hour, and then price just immediately moves away. Now, if we don't catch it, then you get a second move down here, right? And some people may say, well, that's actually where you got the change of character, right? When this moved down to here, right? And you get the change of character right there from that break of structure right there coming down. Sorry. So that could be the case. Anyway, that leaves kind of this candle right here where there's imbalance, right? Again, if we turn on that imbalance detector, that's what I'm talking about. So this isn't a very, very good impulse candle here, but the next one is. And then this is kind of your area here. Your stop loss would still have to go up above this wick here. And you can see price comes back, gets you in, and then pulls right away. So that's kind of how that pulled right away from that area there. And so that's how the 3 trades looked that I actually took this week. Now, there were some other trades. There's a couple other pairs I want to show you. One of them would have been a losing trade, and that was in AUD USD. So in AUD USD here, you can see his price, comes back into this 4 hour demand supply zone right here, right? It then gives you that change of character to the downside on the 4 hour time frame, right? You have that refined supply zone here where you can get in, right? You can see how, if you look at the market structure here, even on the 4 hour, you could see how it's kind of moving up to there, right? So right here, it kind of moves up to here and down to there. Then you get the break of structure here. You get the change of character right here. You have a new, you have some, a little bit of little bit of imbalance right in there. You can see price comes back there, starts to move in your direction, then it goes up and you get stopped out. And there's really no zone up above there. But the big thing here is this is where you get a 2x2. You see how I marked 2x2 bias is now bullish. Okay. So we got this change of character here. And when price moved up past this area, right, it needed to do that to get to the zone, but then it pulls back and then it breaks structure again to the upside. And so now what you have is it's now the bias is now bullish on this. And you can see here that on Friday, just before the market closed here, price came back and it hit this demand zone right here. So now next week we'll be looking to buy this, right? So what are we going to do? It hit our demand zone. We either drop down to the 1 hour or the 15-minute, or we just stay on the 4 hour. And again, what are we looking for? We got that move into the zone, right? Maybe it we got to move into the zone, right? Maybe it goes lower. Then we get that break of structure, that change of character to the upside. It pulls back to a refined zone before taking off to the upside, right? So that's kind of what we're looking for. That's a little bit crooked, right? But as price is moving down here, we look for that first change of character structure break to the upside, telling us that it now is ready to move to the upside. And again, you can drop down to the 1 hour to get this. You could drop down to the 15-hour. I'm sorry, the 15-minute, or you could just stay on the 4 hour. If you don't get it, if you don't see any imbalance, if you get the change of character, but you can't find a demand zone that has imbalance, right, on the 1 hour or the 15-minute, you could just, or if you just missed the trade because you're not at your computer, then you can just, wait for the structure to happen on the 4 hour, wait for that confirmation to happen on the 4 hour as well. So this was a trade that lost. AUDJPY, right? This was one here where, again, you can wait for the structure to just occur on the 4 hour time frame. This was a 4 hour entry. I had this marked. Now, again, I didn't take this trade. I wasn't able to take this trade. I can't take all trades because I'm only at my computer in the evening when I get home from the restaurant. So I can set my limit orders, based on what I see during those couple hours. And then after that, I have to wait till I look at the market the next day after I get home from the restaurant. And then I miss things, obviously. But you could see here our price went through this first supply zone right here. And we didn't really have any, we just had a little bit of imbalance up here in this next supply zone, right? There's a little bit of imbalance. If I turn on the detector, it's a little bit hard to see. You can see that pink line there. It's a little bit hard to see when you have the highlighted supply zone there. You can see how the structure moves up into that zone, like I'm showing you here, right? Moves up, right? You get that pull back, moves up into the zone. And then right here, you just get a break of structure to the downside. It just, you'd like to see a little bit more than this, but you could see this wick right here. And you can see that the body of this candle right here, if you look at it here on the chart, it does close just below that wick, right? So this candle closes below the low of this candle here, just barely, but it does. And when that happens, it leaves this new supply zone, this refined supply zone right here. This candle right here, because this is the impulse candle that creates the imbalance, right? You can see the imbalance. Again, if we turn on the imbalance detector, there's all kinds of imbalance right in there. Some of it gets filled right away, and then it comes back up. You get into the trade, and then right away it moves away and goes down. And again, this one here, with your stop loss, you'd have to go right to there. This is like a 1 to 4.13. So basically, for every dollar you risk, you get $4.13 back on this if it gets here all the way to and all we're doing is we're just targeting this low, right? We're targeting at the low that the market had already made. So we're not doing any wild targets, you know what I mean? It's just places that the market has already been, we're targeting those places to as our profit on the trades, right? And so that's what's able to give you the 1-to-3, 1-to-4, 1-to-5 risk to reward ratios that enable you to make money even when you do have a string of losing trades, right? Or even in my case, where you lose 3 out of 4 trades like last week, or you lose 3 out of 6 trades like this week, right? Um, that was kind of it for the week here. I think NZD CAD, maybe one more here, NZD CAD. So this one here, the same exact thing. You could just stay on the 4-hour time frame to get that confirmation, right? Here you see price move into your demand zone right here. And it does go a little bit through it, right? But then the very next candle comes right back, okay? Then it actually comes down. It actually makes a lower low with the wick there. And then what happens is then it moves up and then it gives you that change of character to the upside. Okay. And what we were doing is we were targeting these wicks here. But since this candle makes a new low down here, you could really just target, like this area here as your change of character to the upside. And once you get that, then now you have this zone right here, right? You could see this indecision candle right here, right before this impulsive blue candle, leaves a little bit of imbalance from that wick to that wick, right? We turn on the detector, you can see it, right? It leaves that little bit of imbalance, and that's the zone that we like. We don't like this down here because there's no imbalance, right? Turn the detector on, there's no imbalance. This is bearish imbalance to the downside. We're looking for the bullish imbalance here. Okay, so there was no imbalance down there, meaning there's no reason for price to go down there unless it's going to keep going. Okay, so right here you could see, and again, it's a refined zone here. Now I have my stop loss all the way at the bottom of the zone here for just to not be so aggressive. If you would just use like below, a little bit below that zone, you wouldn't get stopped out. I put it all the way down here. And even if so price comes back, boom, that wick comes down, gets you into the trade. If you set your buy limit order here at the top of this wick, you come down, you get in that trade, and then it moves right in your favor, right? And so even where I have that stop loss very conservatively placed, this gets almost a 1-to-2, before the market closes. It gets right about a 1-to-2 before the market closes, right? And so that was a good one as well. So that's it there. Like I said, we were able to take actually 6 trades. It was 3 pairs that we traded. And like I said, we got stopped out of all 3 trades when we initially got in. And then when we reread the market structure, we seen that we did read it right. We were going the right way. We just put our stop loss. We were too aggressive with our stop loss. And we got back in. And in getting back in here, like I said, for the week, we showed a profit of $2,026, which is 2% of the trading account. So that is the weekly outlook here for the week of where are we at here? February 17th through February 21st, 2025. So if you guys have any questions, just get in touch with me either on Facebook, by email, however you want to do it, on Messenger. Send me a text and I will answer any questions you have. Have a great weekend, guys, and stay safe.